So welcome to Game Plan Sunday. Today is August 29, here with the crew, and we'll just take a look at what occurred in the markets over the past few weeks. As y'all know, I've been going on vacation, chilling. I'm still kind of on vacation. I got that drink in my cup, you feel me? So we're going to have a nice little live session here, not too long. We're going to cover all the most important details and then get it moving. So a lot of different things have happened over the past few weeks. Just take a look at the review in our news headline here on the website, Wallstreet.Jackboyz.com. Make sure you subscribe, create you a membership here. This is our own Facebook. But anyhow, you can see we had a lot of important things that popped off last week. There was the FDA approval of the Pfizer BioNTech vaccine. There are some other reviews about the particulars of that. I'm not going to get into it on this channel here, but definitely make sure you guys check that out. Then we also had, let me go here, the Fed Chair Powell. We watched the Jackson Hole Symposium thing here on the website. It was posted in the news feed and everything. So we watched that live when we was in the chat room on Friday. And that was the most important thing that happened last week. It was, when Powell basically said nothing different than what he's always been saying. Head fake the markets. The market's expecting them to, get ready to taper and all this other stuff. They're not going to do it. And so, again, nothing has changed from our hypothesis. Everything is still the same. Even though I've taken a vacation, nothing has changed. And just like I told you guys before, just like my man Peter says, if you have a headache and your only aspirin is a handgun, will you use it? Calling them bluff. So they're not going to use it. So it's all a bunch of hype that's in the market. The market is all up on hype, trying to digest what the feds are saying and moving, things in the market ahead of something that's never even going to happen. Not anytime soon. It's going to happen, but not anytime soon. By the time the feds raise rates, it'll be because they are forced to, not because they have the power to just freely go and raise rates. So again, it's just a bunch of talk in the markets, and we see a bunch of mispricing in the markets. But that's a good thing for, newcomers getting in on certain things like gold and stuff like that. When they misprice these things, they have a sell-off. You can get in at a lower price. So that's what the market is miscalculating, okay? So yeah, that's what we got popping off here, with this whole situation. So anyway, like I said, it was nothing that we already didn't know. Inflation again is out of this world, and it's going to continue to go out of this world because their only answer is to keep on printing. So we'll talk a little more about that here a little later, but we had that. Next headline here is no excuse mandates. The FDA approved the Pfizer BioNTech vaccine, remove an excuse for being unvaccinated. So you guys know the government has this agenda to get everybody, vaxxed and by any means necessary, scare everybody to death, what have you. And now we're to the point, it was voluntary. Now it's getting to the point where it's all, they're trying to force, do these mandates. And when they start, mandating things, the government has the ability to use force. It's very coercive and compulsory. But they're slick with it though. They do what we call passive aggressiveness. These are still acts of violence, but they're passive. Like they're not just upfront like a threat. But what it is they force you into a situation that will harm you. In particular, we have companies, corporations forcing their employees to get these vaccines. So employees are faced with the decision to, hey, do I get vaxxed or do I quit my job? And if you quit your job, how are you going to survive? So it's a life or death situation. So now you're like, I got to get the vax. So they give in. And you can put somebody in any kind of situation that's really bad for them. And when they look at it, they're probably going to choose the situation that they don't want to do against their will because they don't want to die. They don't want to die. It's not because they don't want to die from the virus itself. They don't want to die from starvation. You know what I'm saying? So very, very tricky situation. I gave you guys a couple references to some books that's been written way back in the 20s, the 40s, the 50s. This stuff has been written by Ludwig von Mises. He's the master teacher of the Austrian School of Economics. You guys know I'm a student of the Austrian School of Economics. And my man, F.A. Hayek, he has a book called The Road to Serfdom. I've showed you guys it several times. Add these books in your library. See, the cool thing about the Austrian School of Economics is that it's just all logic and reason. You don't even need math equations for it. So a lot of people don't like it. They say, oh, it's outdated because they don't use math. You don't have to, because it's all logic and reason. That's how we're able to deduce things to their ultimate end. You just play these things out. And so anyway, but they wrote about these things, about tyranny, the removal of, liberty. So that's the path that we're heading down. Now, there's another book on the opposite side called The Great Reset by Klaus Schwab. I call him Santa Claus. I showed you guys that book as well. All of this stuff has been written, what the plans are, what they're trying to do. So make sure you guys check out those books. But anyhow, this is really interesting. They said that the Pentagon ordered all military personnel vaccinated. New York City set a September 27 deadline for teachers, and companies like CVS Health, Chevron, and Goldman Sachs joined the mandate wave. This is a fascist regime. Here you have corporations acting as arms of the government. They're facilitating the will of the government. So there you go. You have your hierarchy, government, corporations, people. What the government says, government remove benefits or give benefits. This incentivizes corporations to facilitate their will. Okay. So that's what they're doing. The total of children with COVID mushroom, especially in the South, as schools reopen, and governors in Texas and Florida struggle to enforce school non-mask mandate orders. All right. So what they're saying is, because of this FDA approval, they're hoping that people will now jump on the bandwagon to get the vax juice in their arms. So we'll see how that goes. It's not just the FDA approval, like I was saying to you guys earlier. It's now that their jobs are starting to force them to. Okay, and these are all anti-liberal acts. This is America, but we are going down the socialist slope. We're going down the same path that we've seen over and over throughout history. That's why I encourage you guys to be students of history and economics. Okay, all of this stuff, plays a role in the markets. Okay, so because the markets is basically a collection of just people, making decisions, and so all of these factors, these are variables that's interacting and acting upon the actors in the market. And so that's what we see the outcome of in the markets, how they're feeling, the sentiment. So this is all important. Okay. But this is, to me, is crazy to mandate in a market economy. We talk about capitalism. We talk about market economy, market-based economy. What people don't understand is in a market economy, people have freedom to choose. It's all about competition. So you have on one end competition, and then on the other end, you have people that have the freedom to choose. And so people choose whatever is the most superior products at the lowest price. And those companies are the ones that win for delivering the most value at the lowest cost. That is voluntary. Okay, that's not compulsory. When it comes to, medicine, all this other stuff, you got these big pharmaceutical companies. They don't have the best track record. Everybody knows. In fact, there was a movie called Dark Waters with, Mark Ruffalo? It just came out, I think, about 2 years ago. Really good movie called Dark Waters. Check that movie out if you haven't seen it. I went to the movies and saw it. I'm surprised it didn't get as much press because it talked about, factual history with Johnson & Johnson and how they used Teflon and contaminated the water. But these are chains that, once they bond with your DNA, they're unbreakable chains. They're permanent. And it's like poison in the water. Anyway, it's called Dark Waters, man. Check it out. And you guys can see why people don't trust these big pharmaceutical companies. But in an ideal market-based solution for this whole issue, what you would need is competition, okay? You don't just have Pfizer, Moderna, and Johnson & Johnson. They got the vax juice. Everybody's going to pick between these three. That's not competition. You allow market-based solutions. So some solutions will be, vax juice, as they call it. But they're actually gene therapies. It's not actually vaccines. They're not the traditional definition of vaccines. Traditional, vaccines will be them introducing, a dead version of the virus itself or a lower stated virus, introduce it to your body, allow your immune system to interact with it to build immunity. Okay, it figures it out. And then if it ever faces the problem again, a real life, it'll have the solution to overcome it. That's what a traditional vaccine is. This is different. This here basically is performing inception off of the RNA, the coding that your body does to send information out, and it's intercepting that and replacing it with this spike protein thing to force your body, basically trick your body to believe that it has a virus in it, so then your body starts to produce the stuff. Anyway, so it is not the traditional, definition of what a vaccine is. So anyway, a lot of people have these fallacious arguments that, oh, you had these other vaccines in your life, so why are you posing this? This is not the same thing. Okay, mRNA is hacking. My first time even hearing about the mRNA, I'm in a group full of hackers that hack, and they first actually brought this to my attention, and it was like, oh, this is hacking your DNA. I was like, oh, this is crazy. So that's why some people have problems with it. Now, if some people want to take it, that's great, because it allows alternatives, allow people to see different solutions. Okay. There's natural solutions, people that like natural health, like myself. I've been someone that's been on natural health, pretty much my entire adult life since after 25. Started eating healthy and all that stuff, even though I got that juice in my cup right now. But it's one of those things where if you allow all those different solutions to play out, people can observe what's working and what's not working, and people will voluntarily make the best decision for them. So if they see that it's working, people would do it. That'd be a much better situation. In this situation here, you have a government that's paying for all of this. So all of this is paying big pharmaceutical companies big money, billions of dollars. They waste so much of it. They're not efficient, whereas private companies, market-based solution, they have to be efficient with resources. They can't just waste resources because they will go out of business. Okay. So they have to do the best thing. So that's why it's not about solution. It's about alternatives. Okay. It's not like, oh, this is the right way, the wrong way. So we're seeing all of this in the market where, you have lots of doctors out here who actually are opposed to the mainstream doctors. And so this is the main fallacious argument I hear is that follow the science, follow the science. Well, which science? Whose science? What people don't understand is that science is not one person, one brain, one thought. Science is not about like this consensus. It's about, debating to further ideas, okay, to further studies, to further solutions, because there's always alternatives, so it's not about people acting reckless. Nobody wants anybody acting reckless. It's about what's the best solution, okay, because there's other solutions that people should consider. But forcing people to put something in their body is anti-liberal. This is really, really bad. We've seen this happen in all these, communist socialist countries. And the problem that you have is that you don't want this to happen, because once it starts, it doesn't stop here. It starts at, this level, but it continues if you allow it to go. So this is why I've been telling y'all for weeks that we're looking at all the ingredients for what revolutions are made of. Okay. What revolutions are made of, we're on, the brink of that. So we have to be careful when you give, like I said, if you give the government an inch, they'll take a whole mile. And when you ask for your inch back, you'll never get it back. So you have to be careful about exchanging your liberties. And that's the way the government does. They will give a little bit, just a little bit, and it keeps going and going. You never get it back. Okay. So this is the problems that we have. And I wouldn't be surprised, like I say, in Australia, they show truck drivers who are upset, people getting beat down by police over there. The truck driver said they're coming together this one truck driver said they're coming together to block off all the highways because of this mandates. They're standing up against their, tyrannical government, and they said they're going to block all the interstates. So there's not going to be any foods. They're wanting everybody to go rack up on your food, but get all your supplies, because we're going to block this whole thing down. So, and again, I just saw that on Thursday. So I would imagine that will have some impact on our markets as well. If they're going to, that's what they're going to do. So we have to be careful about this situation. I know a lot of people think light of it because, oh, you got vaccines and stuff like that when you were a kid. This is not the same thing. Okay. And people have the freedom. All right. Now, there's a certain case that you guys need to be aware of called the Nuremburg Trials. The Nuremburg Trials happened, with the Nazis. Okay. What we learned from the Nuremberg Trials, the international courts, is that they ruled in the favor of human rights. What they came and said is that there are rights that are above a country's rights. Those are human rights. And if you violate those, you'd be punished for it. The Nazis, they were begging the courts to, give them a pass because they were just following the orders of their country. And it's like, oh, nah, you can't do that, B. You can't do that. You can't violate people's human rights. And one of those things is somebody's body, the human body. You have the right to own your own body. Everything that your body produces, everything that goes in your body, it comes out of your body, it belongs to you. Nobody can own that. So slavery, again, that's another wrong thing. You can't own someone. These are principles of liberty that they never teach anybody in school. Again, I told you guys, I don't make these things up. I studied the Austrian School of Economics, libertarian, documentaries and stuff like that. So these are all the principles of liberty. Just showing you guys that there are alternatives. But we have to be careful because there are going to be people that's going to stand up against this. And I'm one. So do as you will. But once people lay down, the government will continue to grow and extend its powers until you have a totalitarian government. You have to keep it at bay, protect your liberties. Anyhow, next one, Afghan airlift. So U.S. troops installed a security perimeter around Kabul airport amid a massive airlift. Over 100,000. A suicide bombing from an anti-Taliban terror group killed around 170 at the airport, including 13 U.S. service members. President Biden vowed revenge. He vowed revenge. In fact, he said, we will not forgive and we will not forget. That's what he said. So y'all don't know I'm sipping, okay? Make sure y'all pour something in your cup, okay? Under pressure from insurgents and cut off from funding, began talks with the former Afghan leadership. So this situation is really, really bad on America, its allies. You got to understand we have other allies that's under pressure from, other countries like Taiwan in particular, where, China and Taiwan, that whole situation, we basically, giving all this protection, but China's like, you see what the Americans did over in Afghan, they abandoned them boys. What you think they're going to do with y'all when we get the whooping on you? And they're going to abandon you too. So they're using this to muscle. And Biden's leadership is called under question. So it's a lot of people. In fact, they just moved forward with some type of impeachment stuff on Biden, saying that he's a threat to national security. So this is going to be all over the news. It's going to continue. It's a really bad situation. I saw footage of, people falling off airplanes the week prior. I mean, it was crazy. People were really trying to get up out of there, trying to come to America. So again, you guys gotta be grateful, man. We're in the greatest country in the world, no matter what nobody tells you, okay? People are dying to get to where we are. So understand that. Now, the problem is that we are going back from those things that made us the greatest country, like as far as, market economy, capitalism, if you will, and liberty. So we're changing, we're going down the socialist slope, and we have to, maintain liberty, freedom, so that for everybody can be happy and have a great quality of life. So we have to watch out for these things here. Now, moving the agenda, the House saw a swirl of maneuvering on key Biden agenda bills, passing a $3.5 trillion spending measure without GOP votes, clearing the way for an infrastructure bill and Voting Rights Act. Infrastructure has passed the Senate, and the spending bill could pass the party lines through reconciliation, but voting rights faces difficulties. So again, the government's talking about spending more money. Somebody has to be taxed in order for the government to get this money, to spend this money. None of these things are new, people. So I'm trying to tell you, it's just amazing when you go through history. FDR, he did these same type of things. That's how we're able to tell you, like, okay, this is what's highly probable to happen. Somebody's got to be paid. Somebody's got to pay for this. They call FDR Mr. Soap the Rich. FDR, again, served 3 presidential terms, 12 years. He died prematurely in the last term. No president has ever served as long. In fact, he had to offer some type of rebuttals because people were calling him a dictator. Okay, so and that was the beginning of American fascism. So, but what he did is he went to tax the rich, and it did not fix the economy. You're talking about the Great Depression. Okay, so trying to come out of the Great Depression, it became a Great Depression because of all the government interference. Okay, all the government trying to fix things. Well, the economy is kind of like the natural body. It will fix itself. It doesn't actually even need government. So most people are under the impression that it needs government. It actually does not. Just like the body fixes itself, the immunity, you just got to stimulate it. So the economy is the same way. But when they intervene, they throw natural systems off, and it causes the recovery to be much longer. So the recovery took a lot longer. Under FDR, 8 years, okay? 8 years, the economy was depressed. It took a war wants the war, World War II. He got us into World War II, and that's what got, unemployment and everything up out of the hole. That's why I was telling people Biden is going to need a war. We're in a situation where they can't stimulate the economy no more. Interest rates are at zero. They've been here for a while. Inflation is out of this world. They're trying to, mask it as much as they can. But we don't want to end up like a situation like Germany, hyperinflation. That's worst case scenario. You don't want that. But it's looking like that could be the case. So you have to be careful on these things. And Mises, he wrote about these things. He actually came up with this whole business cycle. He actually, discovered it. Okay. That's how we're able to talk about it. The crack up boom is what he called it. And he has a book called Human Action. I don't have it on my desk here, but I got it in the library. Human Action, make sure you check it out. This guy covers everything. He's a freaking genius. So anyway, all this government spending at a time, where they think that is going to, fix the economy, but it's not. So anyhow, so Powell to Jackson Hole, Fed Chairman Jerome Powell suggested to the virtual Jackson Hole confab that the central bank might begin to reduce its bond buying program by year end, though the Delta variant did provide some uncertainty. Again, it's all talk. There was nothing that we already didn't know from the Jackson Hole summit. No new details. But you got to understand, it's other presidents that are there. They're all debating about what to do with the economy. So Fed. You have these Fed presidents like Bullard and all these other guys. They're screaming for they're screaming for tightening. They're screaming like, hey, we got to do something. The economy is hotter than what Powell is saying. But Powell basically, he's the head. So what he said, that's what's going to go. But they're seeing things. And so, again, you have this whole, debate. And we got the markets that's swinging choppy. This past few months, that's the way it's been. It's been super choppy for you guys that's been trading. The market has not been clear with directions, even though it's been moving higher, but it's chopping all the way through. That means people are getting ripped. You know what I'm saying? That's why the OGs, the legendary investors, a lot of them, they're like, oh no, I'm not touching that. You feel me? I'm just practice patience, because patience is a position. Nobody knows what to do. There's no price discovery. But these are things that the natural economy figures out. You remember I told you guys about the scenario with the ants. A lot of things that we do as humans, we get from studying animals. Okay, everything. Just take a look at everything. Airplanes, birds, helicopters, dragonflies. We see these things in nature. We try to mimic them. So the economy is kind of the same way. Like I was telling you guys with the ants. If you take your finger and rub it across where ants are walking, that chemical scent throws them off. They go crazy. They lose their sense of direction. That's what's happening with the market. Market has no sense of direction. Going here, and getting chopped, whipsaw, which way, okay? So it's really hard, especially if you're swing trading, because you're getting ripped, and you got to have what they call diamond hands, like the Bitcoin guys say. So it's really choppy. So it's been a lot of day trading. So that's been like the whole thing, day trading. So in our chat room, you guys know we in the chat room every day right here on the website. And just pop this little chat thing open, hit the chat room, boom, we in here every day. So when you go to the website, make sure you just open this up. Don't matter what you're doing, just open this up. You're going to be in the know. Everybody's in here every day calling out the plays, blah, blah, blah. So that's what we're discussing. We're live. It's free for all members. So if you're not a member, make sure you create a profile. Membership is free as well. So check it out and then join us every day, man. So that's what's happening, though. All right. Next, ride-hailing and delivery companies took a hit. A California judge ruled that Proposition 22, which let them treat workers as contractors, was unenforceable, saying it is illegally curbed the legislature's power. Excuse me. So there you go with your Ubers and Lyft and all of that stuff. The whole California situation. This, I think it was like a year ago when it first popped off. So there you go again. They got hit. All right. And Bill Ackman plans to return $4 billion to investors from his special purpose acquisition company. I think, Jonathan, we were talking about this, was it Wednesday or so? We was talking about the golden boy of Wall Street, Mr. Bill Ackman. All right. So he's returning $4 billion to investors from his SPAC. He has a special kind of SPAC company out here, Person Square Tontine, after being sued by shareholders. Interesting. All right. Golden boy. The Wall Street Journal reported that Western Digital is talking to memory chip maker Kioxia. Probably just tore that up, but that's what it looks like. About a $20 billion deal. Boeing agreed to invest in Richard Branson's satellite launching Virgin Orbit. That's interesting right there. Boeing. You guys know Boeing, they've been in space for a long time. You know, it's funny. I used to see Elon Musk on Twitter talking cash money to them boys. I mean, I'm like, yo, what does Elon Musk know that we don't know? Because he's talking greasy to them, like, and they've been doing space, you know, probably since he was a little baby. You know what I'm saying? So, but he obviously knows something that they don't know. But it's interesting that they are investing in Richard Branson satellite launching Virgin orbit. So, Sir Richard Branson getting some bailout money there. Pfizer plans to buy cancer-focused Trillium Therapeutics for $2.3 billion, a 200% premium. That's funny. Y'all don't find that funny? Where do y'all think Pfizer got that money from? That 2.3 billion? They're paying 200% over premium. Y'all know the code in the market. We buy low, sell high. Why are they spending extra money on top of extra money? Anybody want to answer that? Listen, man, I got the Don Julio in the cup, okay? Talk to me. Anybody even know where Pfizer got that money? 2.3 billion. Okay. The government. What do you think is paid for all the vax juice? So the citizens get the vax juice for free, but not really. The government paid these big pharmaceutical companies all this money to produce these vax juices. So there you go. You have big pharmaceutical companies being bailed out. They got all this extra money. Now they can throw around the clout by companies. You know what I'm saying? This is what you got to be careful for, man. It is the unseen, what you're not seeing. Always ask questions. What is it that you're not seeing? Okay. Y'all know the saying in the movie Rush Hour. Chris Tucker says, "Follow the rich white man with all the money." You want to know? He said, "You want to know what's something going on? Follow the rich white guy with all the money." You got to follow the paper trail. Somebody knows something. All right. KKR backed Axel Spring bought Politico for $1 billion. All right. It's a non-factor to me. Let's see. Topaz got on our radar here. Some IPOs. We got High Peak Energy, Aspire Global, Alpine Acquisition Corp, Generation Income Properties. And here are the dates, September 1st. So all of these are launching this week. Shout out to Topaz. Thanks for dropping that in. Y'all know Topaz should be on the road, so she's not here today. But she go in and she update everything. So definitely shout out to Topaz, everybody. All right, Terry. There we go. Y'all see that right there? Washington Jackboyz. When we dropped that, this must have had Terry in the vibe. He remember that right there. All right. It's just a game. And it's not about me. It's about everybody, community. That's what we got. WashingtonJackboyz.com, the website. It's our own Facebook. Get in here. The same way people got Facebook popping, we do the same thing. People provide the information for free. Y'all come in here, post, interact, communicate, connect with each other. Like, these are all people with like minds, you know, going to the same places. All right. Let's check out earnings coming up. Thanks to Terry. All right. So Monday, we got Cloudera. I don't know these other companies. Zoom is going to be big though. So Zoom, but this is going to be after the bell. So Zoom is going to be big. Cloudera is going to be a focus point. That's ahead of the bell. But pretty light Monday. Futu on Tuesday. Let's see. These are a bunch of Chinese companies actually. All right, cool. I don't recognize any of these other ones here. But Wednesday we have Chewy. We have Okta. Watch out for Okta. I think they're going to do good. Is that Campbell Soup? And then we have Viva. Okay. We have Five Below. We have Smith & Wesson. Okay, so Wednesday is going to be a much better day for earnings. All right, what people are going to be paying attention to. Thursday, we got DocuSign. We have Broadcom, Cooper. Let's see, Duluth, Signet. And then Friday is not going to be anything, so it's going to be light. So the bulk of the juice is going to be on Wednesday. Monday and Tuesday are going to be pretty light as far as earnings go. Looks like a bunch of Chinese stocks. So there you are with the earnings preview of what's coming down the pipeline. All right. What else we got coming down the pipeline here? Preview. All right. Monday, Zoom discloses quarterly results. Then the National Association of Realtors reports its pending home sales index for July. All right. And then Tuesday, we have CrowdStrike. CrowdStrike been killing it. Okay. CrowdStrike Holdings, NetEase, and PVH announced earnings. The conference board releases its consumer confidence index for August. So we pay attention to see what consumers are looking like for August. Economists forecasting 124 reading, about 5 points lower than the July figure, which was the highest since the start of the COVID pandemic. Okay, so they're expecting for the confidence to go down some. The ISM releases the Chicago Business Barometer, a leading indicator for the U.S. economy. Expectations are for a 67.4 reading for August, lower than July's 73.4%. So again, they're expecting things to start to go downward. And again, this is pretty seasonal though. So you normally, once the kids go back to school, you start to see things that start to calm down anyway. Summertime, it's hot, it's popping in the streets. Everybody's in the market spending, vacationing, trying to live life. School comes back in. You got to, stack your chips back up because you got to get ready for the Christmas holiday season to spend some more money. S&P CoreLogic reports its Case-Shiller National Home Price Index for June. The consensus call is for an 18% annual gain. If that estimate proves to be correct, it will be the third consecutive record increase after 14.8% and 16.6% advances, respectively, in April and May. In May, cities out west, Phoenix, San Diego, and Seattle, they led the way with better than 23% year-over-year jumps. So again, these are the home price indexes. So again, we gotta be mindful of what is taking place right now in the home market, the housing market. Interest rates are really low. Okay, we got the data right here on the website for you guys. When you go to the news feed on the website, again, news feed, you can access it anyway. But right underneath our calendar, which we can see everything that's coming up, which is above here, we have the rates, mortgage rates. So these are, live every day. You can see if they're going up and going down. So I can show you guys the bond rates here in a second, but that's where everything is at right there. And they're chopping sideways going up though. So they are starting to uptick. Looks like they kind of bottom out. But those rates are starting to go up a little bit. So, but yeah, basically a lot of people are getting outbid in the market to buy houses. For those that don't know, housing is really expensive. There are participants in the market that, normally don't be in the market like that, like what we're seeing. In particular, I know people have family members. I have, clients. They've been having the company Zillow to buy their homes. So if you can imagine trying to go out and buy a house and you're trying to secure a mortgage on it, but Zillow comes to compete against you with cash money. Okay, can you imagine who's going to win? It's not going to be you. Okay, you cannot compete with corporations. So corporations, they're sweeping up all the houses like Monopoly. It's a Monopoly game, right? Get the houses, get the hotels, and people always got to have a place to stay. So when you land on the spot, guess who's going to make the money? Zillow and all these other companies, you see? But it is robbing the citizens from home ownership. And I told you guys earlier about that book called The Great Reset. Check that book out. Okay. Klaus Schwab on their website. Again, this is the World Economic Forum. All the big wigs in the world, they come here every year. And they told you on the website, you will own nothing, but you will be happy. Okay. This is where we headed, people. I mean, again, y'all got to wake up. You got to wake up out the matrix, man. You need your private property. Okay. You have no ownership. There's no wealth. So your wealth will be taken, all right? Unless you fight. Stand up for your rights, for liberty. All right? So anyway, that's what we see on Tuesday. Wednesday, we got the ADP releases. It's National Employment Report for August. Economists forecast an increase of 637,500 in people on non-farm private sector payrolls after 330,000 gain in July. Brown Foreman. Okay, so this is the job release, the ADP before the big one comes out, and so we'll see if the market moves on that. We have Brown Foreman, Campbell Soup, Chewy, Okta. We already went over those quarterly results that's coming on Wednesday. So again, so Wednesday is going to be a big day. The ISM releases its manufacturing PMI, so we always go over the PMI. So we'll have an update on that next game plan Sunday. The Census Bureau reports on construction spending for July. Expectations are for a 0.4% month-over-month gain to a seasonally adjusted annual rate of 1.56 trillion. All right, so we're going to get some more data on construction spending, which, again, we're seeing a lot of companies that are spending more money. And that's another way that we can gauge inflation because, again, those costs get passed on to consumers. All right, Broadcom, Cooper, DocuSign, Hewlett-Packard, Hormel Foods. Okay, just a Thursday. We talked about that already. Then Friday, there's no earnings, but we have Kansas City Southern has a special shareholder meeting to seek approval for its proposed merger with Canadian National Railway. In May, Kansas City Southern agreed to combine with Canadian National in a cash and stock transaction value at roughly $34 billion. And then we also get the ISM release its service PMI for August. The consensus call is for 59.5 reading, lower than July's record high 64.1. So they're expecting that to go down some because July was 64.1. They expect a 59.5. So it should, come under that. But if it, again, goes higher, that is not going to be good for the markets. The Bureau of Labor Statistics published the jobs report for August. So we get the job reports I was telling you guys that comes after the ADP's job numbers. So the ADP numbers are kind of like a primer, gives people prime for what's to come on Friday. So we'll see. Forecasts have the economy is forecast to have added 781,500 positions after a 943,000 increase in July. So they're expecting jobs to go up, but not as much as they did in July. The unemployment rate is expected to have edged down to 5.2% from 5.4%. All right, so these are what we are expecting to see coming down the pipeline this week. That's the preview of what's coming. We had some data. I think Terry posted in the chat. I'm not even going to go over it, but it was about the job numbers. We're seeing the unemployment numbers going up slightly. That is not a good thing. But what's happening is that they are expecting to basically force people back into the job market. And I say force, again, it's a little passive. But for one, they got people hooked on these unemployment benefits. And then now they are cutting them. So this month, September, coming into September, you got to understand those unemployment benefits, they are supposed to be ending. Okay, they are supposed to be ending. They say they are for real, that they're going to end them. Powell, he talked about it as well, because, again, they had this goal of getting this 2% employment rate. But they still are falling, very short of it. Now, some of the miscalculations that they have that we'll see here is that they're expecting to get people, before the lockdown, the whole pandemic happened. Say employment was up here and then it dipped all the way down. Okay, so it dipped all the way down. They're expecting for it to come back to where it was before. That is not going to happen. Okay, so we're never going to hit that level. And the reason why is because a lot of dynamics changed. Once everything hit the fan, you had a lot of people that left out of the labor force that are not coming back. You had a lot of people that just took retirement. You guys got to understand that baby boomers are the cream of the crop. Young people do not make as much money as the baby boomers. Okay, the baby boomers, again, they were the cream of the crop. They were just too stressed out. A lot of them have retired. They just threw it in the bag. They're not coming back. So even if we recover some jobs, we just won't hit that level. Furthermore, we have a lot of women that are out of the labor market as well due to child rearing situations, and they're not coming back. Okay, y'all know I've been on vacation for the past 2 weeks. Went down to Florida, had a great time, but all over the place, all I seen was shortages everywhere. Shortages, not just labor shortages, not just they only have enough people. But I even saw Chick-fil-A. They didn't even have enough products. And, I haven't seen that, so whenever you have Chick-fil-A, don't have enough stuff, that's crazy, So we're seeing the shortages. Again, this is all inflationary because demand is still high. So you have this super high demand, but you have a supply shock here where you don't have enough supply to meet that demand. Okay, so prices, all these people that had demand, they're willing to pay more to get what they want, and they bid the prices up. So this is still inflationary. There's some other things that they're expecting to be deflationary. Again, people are not traveling as much. Summertime is over. People got to get back to work. Kids going back to school. So all those different factors are going to be mixing all together. And this is why we talk about this whole stagnation type of situation that we're dealing with. And so when the Fed see that, once they realize that they can't hit their goals, their medicine, their weapon is going to be to print more money to try to get people to spend more. Okay. So at the end of the day, this is the situation that we're in. All right. Let me know if y'all got any questions on those things. All right. But just taking a look at the markets last week, this is what we had that came back. Taking a look at the indexes, oil. Let me see here. Let's go to yellow here. So we had the oil at 11%, Russell 2000, 5%, NASDAQ 2.82%, gold at 2.13%, S&P 500 at 1.52%. The Dow Jones was up 0.96%. Bitcoin was up 0.68%. And the dollar was down. The Dixie was down a negative 0.83%. Taking a look at the sectors here, we had energy that led the way at 7.45%. Financials at 3.48%. Shout out to Jonathan for giving us that tip in the chat room about financials. There's a lot of good plays there. Materials, 2.59%. Communications sector at 2.41%. The consumer discretionary at 2.38%. Industrials at 2.23%. Technology at 1.45%. Real estate was down, negative 0.36%. Healthcare was down, negative 1.09%. And consumer staples was down negative 1.35%. Utilities was down negative 2.02%. All right. So let's take a look at the charts here. All right. This is where we are at. With the you can see my zoom right now. We sipping. Okay, we sipping. Wow. All right. So we see right now markets at new highs, 45.13. Okay. 4,513 points at a high. Right now, we can see that it's continuing to go higher and higher. All right. Anybody know why this is keep going higher? If the economy is weak, why is the markets continuing to go high? Anybody care to answer that question? Why is the markets continue to melt up higher and higher? You guys can see we don't have a lot of people that's in the employment. We got inflation that's crazy. Okay. Look, here go the JP Morgan outlook that was at 4,400. This yellow line right here, I keep that as a marker because that's what they were expecting. This is where we are. We continue to melt up, up, up. We had a nice pullback at the 50. Pay attention to that 50. That 50 is strong. So whenever you get a pullback to that 50, that's where you buy the dip. Understand that? That's the dip buying section. How we know? Because every time in the past. All right. We're due for a correction. But is it going to happen anytime soon? I don't know. But the reason why it's continuing to move higher, okay, is because of the expectations of the Fed. All right. The Fed. They say never bet against the Fed, right? Just ride with the Fed. Again, we had the Jackson Hole Symposium. That was the talk of the town for like the past 2 months. And now we just had that. It just passed this weekend. All right. So the talk of the town, there was no talk at all. And so what people was expecting was the Feds to pull back the punch bowl, but they're not. Okay. They're still handing out that blue magic for those who watch the movie American Gangster. Okay. Frank Lucas. You feel me? They're still going to serve the heroin addicts that blue magic. So because of that's happening, we got investors that say, okay, risk is back on. Okay. So you get like a nice little sell off to come down to the mean, the reversion to the mean right there. It's like, oh, okay, they about to pull it away. They was getting ready. Oh, they didn't do it. Boom. Let's go back at it. Hook the arms up to the heroin. That's basically what's happening. Okay. Because the Feds are not going to taper. They're going to continue to do what? Inflate. So because they're going to continue to inflate, you got to remember they're buying $120 billion a month in securities. Okay. This is not market people. This is the Feds. So as long as they're buying, they're inflating, it boosts up the price of assets. Assets are what? Stocks, real estate. Those things are going to continue to go up and up and up. And let me tell you, they're talking about they don't see no inflation, that is transitory, blah, blah, blah. Rents are out of this world right now. Rents are. Do you know why rents are so high? You know why rents are so high right now? I just told you guys earlier about people trying to buy homes. Okay. So people who would have otherwise bought homes if it wasn't for these corporations who are getting all this money, because again, they're in the markets, they're getting all the money and they're buying real assets. Okay. Because that's what you want to do. You want to buy real assets, real goods and services, right? So they're buying real assets because the Feds is going to inflate it. Then they're going to make money off of it. Okay. So because they're doing that, they're pricing people out of the housing market. They're pricing people out of the housing market. So guess what? Those people have to go because they need a place to stay. Where are they going to go? They're going to go rent. So then you have all this demand for rent, not enough supply, prices go up. So then rents are going crazy. And so these things are like permanent. Okay. Anybody know somebody who had charged rent at a certain fee and then they just brought it down? Like it just don't never go back down. It always just go up. Rent don't go back down. So when they talk about inflation being transitory, it is ridiculous. Again, I told you guys it's permanent. Same thing. Well, corporations, companies are paying higher wages. They don't take those wages back. Those are permanent. Okay. So that's why you have to follow the logic on that. So again, we listen to mainstream economists, but you also got to listen to both. Listen to the alternatives so that you can form a conclusion and you can logically think these things through. Yeah, rent is too damn high. Exactly. But these are things that people have to deal with, recurring expenses on a monthly basis. Okay. Listen, I don't know why people keep on talking about used cars and inflation. Most people don't buy used cars every day. You buy a used car maybe once every 5 years or so. So to me, it's not a big thing, but that's what they want to talk about with inflation is used cars. Like, who cares? Let's talk about this rent. All right, B. So, but that's interesting. Another thing is that oil is a good tracker for inflation as well. And so you have the oil markets. Let's just show you that. All right. So you have the oil markets as well. And we already had our threshold right here. We've passed that. Oil was going up higher, but it came down. All right. So oil came down. Normally inflation tracks oil. But when it bottomed here, it's starting to come back up now. Okay. So that is very interesting. Okay. We do have a buy trigger that's on oil, so we have to see how that's going to materialize. But what could possibly cause oil to go up like that? Oil prices, they're still pretty high, but does it, what's the catalyst to make them go up higher? I don't know, but I would say my best guess would be, well, there's a hurricane that's out there in the Gulf right now, and it appears that it's going to be a pretty bad hurricane. And so y'all know where all the oil refineries and stuff down there in the Gulf, they get hit with these hurricanes, it'd be bad. What could possibly happen to the oil markets? What do you see oil going to? It could go up higher. Okay. So you got to pay attention to those type of things as well. Right. So I forgot, anybody know the name of the hurricane? Is it Ida or something like that? I haven't been following as much, but I know it's a hurricane out there. And they're doing, evacuations and stuff like that. Interesting thing, they were saying that they can't evacuate the COVID patients, but they're making sure everybody else get out of here. So I guess the COVID patients, they got to die. I mean, and that's that's what they said. They can't get them out of there, And it's not funny, but I mean, that's what they said. They can't get them out of there. They making sure everybody else can get out of here. They claim it's going to be a really, really bad storm. So we know that's what we'll be paying attention to this week as well. And we'll see how the oil markets react to that. All right. Let's take a look at the dollar. All right. So again, with the dollar, interesting situation here because we had the dollar starting to trend up a little bit. Then it got chopped off at this 127 extension, 127.2 extension, came down. And we see this big blue candle, that sell off. Again, this is, based off of what the Feds is doing, right? What the Feds are going to do. And to piggyback off of that, you see that big drop in the dollar. Well, what happened to gold? Weeks prior, gold got smacked up. Then you see what happened with gold. So people sold a dollar and they went buying gold. Okay. Now, before that, you had all of this crazy sell-off in gold, because people expecting the Feds to do what they cannot do. And so again, it's this manipulation in gold. That's why I tell you, if you're going to invest in gold, you need to have the physical, because there's a lot of manipulation with the paper. But when you go in the physical market, you will see that it's real. Okay. So definitely get you some hardware. Okay. Real assets, not the paper securities that we trade in. Get you some real gold that you can touch and hold on to. All right. Because they have no choice but to destroy this currency that we have. That's what they're going to do. They have no other choice. I mean, they have other choices, but they're not going to make those decisions. It's too painful. They want to keep the illusion going, the wealth illusion going, and that's going to be our demise. So again, we got big companies recently that's been reported to buy shit tons of gold. So you see this big candlestick there that we see. And now even at the markets right now, we see gold is moving up even higher, coming back above those, pre-pandemic levels there. So yeah. So gold is, again, it's looking like it's back on the menu. Again, it's got to clear that 200. So that's what we're looking at. That 200 is major resistance. We see that it's trying to pop up above. It's got to hold that though. All right. And then confidence come back into gold. Again, people believe the Fed for some odd reason. And that's what we have. On the other front, we got, bonds here, bond prices. Bonds are, starting to get above their moving averages here. Again, it's so weird because you're not making no money off of these. So who's buying the bonds, right? Feds, they're buying the bonds. So I just think this is really interesting. The chart itself is bullish on bonds. So, it was before the meeting. Let me just take it back. Before the meeting, it was coming down. You can see, bingo, it was coming down here. So as long as the bond prices go down, the bond yields, they do the opposite. They go up. Okay, so interest rates, they be higher. And then if the bond prices go higher than yields, they go down. In fact, I do have the yields up here. 1 second. All right, so here go the yields here. Just taking a look at the bond yields. You guys can see that it's starting to chop up. Got this floor right here, but we see higher lows, higher highs. Okay, you can see, that situation, in there. So we saw the nice drop. This is the floor. The question is, will it be like a bear flag situation? Yeah, you can look at these like stock charts. It could be a bear flag and it can come back down. Okay, but we haven't seen it yet. So again, it's still the rates are higher than back here. So if you were buying a home or whatever the case may be, it was cheaper a couple of weeks ago, last month, they're higher now. So we have to see how this trend is going to go. So what's important here is to follow the trend there. And again, the bond markets are trying to move ahead of what's to come. Are the Feds going to raise rates or they're not going to raise rates? We got a little more, I can't say clarity because there's no clarity. It's the same narrative that the Feds, they're not going to raise rates. So, but you continue to hear stories of the other Fed presidents that putting pressure on, say, oh, we need to raise rates. And so the markets are starting to behave towards it, but ain't nothing happening. Same thing. All right. Another factor to pay attention to will be the Rona. Okay. I built these charts on the Rona, these dashboards here, so you guys can check it out. I'll leave you guys some links for these as well. I try to update them at least weekly. But basically, these are the cases. These are the deaths. These are the actual deaths laid on top of the cases, so you can get a comparison from that. And if we amplify the two, where you can actually see the shape for modeling, you'll be able to see it better when you amplify it. So you guys will see cases on this side, deaths on this side. So interesting thing is, like Powell and them said that, this whole Delta variant is driving the markets. What's the market expectation? If they feel like it's going to get worse, they feel like it's going to get better, they're going to move towards it. In fact, we had some moves that came in. In fact, let me just go here where you see the charts laid out. All right, so this is what they look like. Blue line are the cases. You guys see the cases really high. You can barely see these little red dots down here, but these are the deaths, okay? So the deaths down here are really, really low in comparison to the cases. A lot of cases. And the deaths are like really, really small in comparison to the amount of cases they had. All right. So we take a look at the depth chart. Let's go red here so you guys can see this. All right, spike. These are the cycles. Again, these upper respiratory viruses, they're seasonal. They have these different seasons, and this was one as well. This is the one that we're in right now, which is looking similar to this one. Okay, so these are the deaths. These are the deaths right here. We can see we have more severe deaths when it first popped off. We're almost here at this level here, and then in the beginning of the year, that was the worst of the pandemic. Okay, the other wave was in around May. It wasn't as bad, and then this one here is worse than the one that was in May. Okay, so if the markets are, again, looking at this like it's going to be worse, then you'll see the markets move towards that. They feel like it's topped out, that it's topped off, meaning that it starts to look like this, like it's going down. Okay, like it's going down. Then you see bets in the market towards improvement. But if they feel like we're going to continue to go up, then you see the markets maneuver based off of that some more. So was it last week? We thought that there was some headlines out that was saying there was topping because it started to look like it was going down. So those people was making some bullish bets, but then see it creep up just a little more higher. So it doesn't look like we've quite topped on deaths yet. Cases, again, they can be as high as they want, but you really, the deaths is what the real focus is at. And again, I mean, they say Delta is really, really, really bad. Which again, I think is bad, but when you take a look at this in comparison to this, it's not as bad as these two were. It is as bad as this one as far as the data that we are observing. So again, you guys can check that out. And then if we amplify it so you can see the two laid over top of each other, you guys can see the patterns together. Okay. These are the deaths. These are the cases that were lower. Not lower, but they were just, because this is an amplified chart. Deaths in the red is on this side, cases blue. You can see the number differences there. You can see the shape there. There's a little lag. You see cases go up higher here. Deaths came up higher a couple of weeks afterwards. So there's a little lag on the data. So as far as the deaths catch up to the cases, and we can see how it fit that map perfectly. We can see we had a lot more cases here, but we had far fewer deaths than any of the previous waves. So I know that the news, they say this so deadly, but it actually looks a lot better than any of the previous times. It actually does when you look at the data. So anyhow, there are other analysts, they're clocking this stuff. They're making their, bets off of, this data here that we're seeing about this this virus that we have. And if their models are showing them higher, then they're going to be, betting as so. So anyhow, I'll share those links with you guys as well. Going forward from that, let's take a look at a couple of plays, and then we'll bring the session to an end. Go ahead and type in your tickers. We'll take a look at those, and then we'll bring the session to an end. Over here, I got my Squeeze Finder Pro Plus scanner up here. Haven't had time to really go through it, but we always get some good plays here. And if you want this scanner, let me know, and I'll put that scanner. I'll give you guys a link for the scanner. It works in Thinkorswim, so if you have the platform, then you'll be able to use that. AMD, as Dustin said, yes. We've been talking about AMD. This is a play that was called in the chat last week. It's actually looking pretty great. We can see that, let me switch that over. All right. So we bounced down to the 20, and now we're coming back up here. We can see we have some buy triggers up in here. We can see the stochastic shift up like this. This is bullish. We can see the momentum down here shifting yellow as well with a squeeze on it. So that squeeze should give us a nice uplift here. What I'm expecting is to at least get to the resistance level here. Okay. I don't know if we can clear this resistance level or not. My bet is to get in, ride the wave up into this resistance, sell off at the resistance. I mean, it could blow through, but that's a pretty hard resistance line there as well. Okay. It could be an inverse head and shoulders. Let's see, that's an inverse head and shoulders there right before it took off. There's an identical inverse head and shoulders. Yeah, it could be a head and shoulders. You can see, that could be a shoulder, this could be a head, and this could be a shoulder as well. So again, I like to see that confluence of different things where we have a pattern shape, Then we have some other bullish indicators as well on top of it. We use that as confidence in the play itself. If it don't work out, don't beat yourself up. You're making a technical decision. The markets are irrational, so you got to understand we're trying to ride this irrational beast here. So, but yeah, I was expected to get that up in there into like, you know, at least the 115 zone here. We'll see if it can push through. If it pushed through, then great. You know, you got these levels right up here at the 100%. That'll take you right up here to 123. So definitely, I like AMD. It's interesting because you got to understand AMD, the situation with these computer chips is these shortages. They have lots of shortages. So keep your eye on that, you know, with the shortages and stuff like that. Demand is ultra high, though. So, but at the same time, they got to be able to meet the demand. If not, it's going to be it's going to be problematic. All right. And then let's see what else we got. Crocs. Yeah, man, I was down at the beach, man. I seen all the gangsters with Crocs on, you feel me? So when you see the gangsters with Crocs on, you got to go and buy the stock, you feel me? So, but, you know, that was my whole idea of investing in Crocs a year ago. You know, my brother them came and saw me. I'm like, yo, the gangsters got Crocs on. What's happening? You know, looked at the charts, and I think it was about like what was that? Let me see. It was right down here. Yeah, I believe Crocs are somewhere between like $30-$60. So great investment there. All right. But if you take a look at the chart on Crocs, again, you got the squeeze that's formed really nice right here. You got some, you know, some nice space up in here, stochastics and everything lining up. So we can see, let's see, Crocs, 147.7 was the previous high. We got a 150 target at the 127.2 extension. I did another swing from here to here to get some more levels. Ultimately here, I got a about $160 target, like as a big target on this one as well. So I'm pretty bullish on that one. What else you guys got? Clack, let's see. Okay. This is another bullish chart. Let's see, it's been a little while. All right, so we could just, you guys can see the shape here from that swing to this floor right here at the 100, starting to move up. We can see the momentum was red is shifting yellow, starting to go up. Stochastic starting to shift as well. So we can see this at about somewhere around 370 target. What's the 1272 extensions, about 370. 360 is a target as well. That's 100% right here. That's, you know, 360. So we can see it definitely come back to that to the 360 for sure. And that'll be enough money that you can get in and get out at that. What else we got? PayPal, UI, let me see. Ubiquity. Oh man, it's been a while since I've seen them. Okay. They like they had a pop off of earnings. Really long squeeze here. I hate long squeezes. When I see charts of long squeezes, I just ignore them because they just have a problem with making up their own mind. But the 618, you know, right here at around 350. And I'm just giving you guys whole numbers because the market like to move in whole numbers. Even though the chart says 348.2, 350 is like a nice number there. So Ubiquity, if it continues this bullish trend here, you got a nice target right there. So bullish on that. And let's take a look at PayPal. All right, so PayPal's actually looking pretty good as well. Let's see. Swing from this high to this low. All right. This floor right here, the 100. And this is a little interesting. This could also be inverse head and shoulders as well. You can see, you know, shoulder, it could be a head, and this could be a shoulder as well. Either way, this is a bullish chart. We have the trend is going up. We have a squeeze in there. Nice oversold territory. And this is where investors like to get in when it's oversold and pile in at. And so you normally get a nice pop in there. We got 618 as a key resistance level. That's about 293 and some change there. So about 293 zone that's up in there. There should be enough money for you to be able to make and get in and get out. So definitely more than enough for those targets. What else we got? Memers are in AMD as well. Hey, memers be on everything. So again, on a daily basis, man, like whenever you see the markets turn red, okay, this is something I've just been seeing. Whenever you see the markets on a red day, don't mean that you can't participate. You can participate. Where the money normally flows at, it be the meme stocks for some odd reason, like the AMCs and all that. Okay, you see like the AMCs, these stocks, the GameStops. You see that bull flag that's on GameStop right there? These are day trading patterns right here. These are day trade stocks. So when the markets are red, you can still get in, scoop up a couple hundreds. My daughter just said, Daddy, it's not hundreds, 100. Okay, you can scoop up a couple of hundreds. Forgive me, baby girl. But yeah, so you can scoop up a couple hundreds, a couple grands, you feel me? But it's always something that's moving. So we're always, watching what's moving. It said Apple got a long squeeze that's been faking out. Oh my God, yes. You had to play Apple on a day trade, Dustin. When I was out on vacation, I was actually still trading. I try not to do too much because, I'm out, I can't be, the nerd. I got to be like a real life person. So, but Apple was good for day trades. And if you didn't get in and get out, you were toast. And you see how it's just chop and chop and chop, and it's crazy. So that's what I've been seeing at Apple, this long squeeze. It's got a lot of volume. So whenever we get a lot of sweepers that's in there, we get in. I'm in these trades for about 2 days, man. Okay, or 1 to 2 days. Scoop up in 30%ers or 50%ers, and I'm out. Like that's just, again, long squeezes, they chop you up to pieces, man. Long squeezes chop you up to pieces. All right, what else y'all got? He said XLK. Yeah, tech has been driving the market, man. So tech has been driving the market. So if anything is moving, it's probably more than likely going to be tech. This is a ceiling that's that we're up against right here. And if you take this swing, you can see that ceiling has been respecting it perfectly up here, but it looks like it's going to disrespect it if it can clear, and then we'll see some new highs. So, I like to piggyback off the XLK when you take a look at the NASDAQ, and you can see how the NASDAQ has been slowly working its way up. Okay, even right now, everything is choppy, but the NASDAQ is green. All right, so tech is driving away. All right, tech is going to continue to drive the way. So that's my prediction on that. Anything else y'all got? What's good, Abel? Thanks for joining us tonight. Dustin, always a pleasure to have Dustin in the building. He got all the plays. Jonathan, the OG, man, I love you, dude. This guy right here, he's faithful. You feel me? In the group every day, dropping the plays. Y'all got to connect with Jonathan. You feel me? You got a shoe store and all that out in Cali. Go check him out. My man, Mark, OG in the building. Appreciate, love the wisdom. Love having Mark in the building. Y'all know he's like a freaking tech guru. He's a very intelligent man. Is that Migion or Megan? I don't want to mess up your name, but thank you for joining. I'm gonna call you Megan until you tell me different. So I'm gonna say Megan. Ron B in the building. And listen, y'all know when Ron is in the building, it goes down. Ron is always coming through. You feel me, with the plays. He's the cup and handles Lord. I call him the Lord of the cup and handles. And Serge always get it in. Appreciate y'all coming in tonight, man. We'll go ahead and bring this session to a close, man. Make sure y'all check us out, wallstreetjackboyz.com. And we'll catch you in the chat room tomorrow. Peace.